I'm Teneale.
And I'm Kelsey, and we're financial advisors from Alman Partners True Wealth, bringing you thought-provoking conversations around you, your money and your life on the Wealth Experience podcast.
Welcome back to Wealth Experience. Today, I'm going to be joined by Jason Kirk. He's one of the business owners and senior financial advisors at Alman Partners and has been here since 2020, but has decades of experience to share with us in financial planning and helping individuals achieve their own version of true wealth. So today, listeners, I'm very excited as Jason zealously approached us and said that he had some important information to share with any of our audience that either currently owns a small business, is thinking about starting up a small business, or just does not know where to go for answers to some of the questions that plague them each day. Now, Jace, before we get into it, thank you for coming on.
Thank you so much, Teneale. I'm very excited to be here, and I've been an avid listener for over a year now.
Good. That's one listener that we've got out there.
Great to be on your show.
Amazing. So, Jace, tell us a little bit about you. Tell our listeners, what do you get up to on weekends? What's life like for Jason?
Yeah, sure. Well, I'm married with 3 boys, all in their 20s, and I'm currently managing a rugby team. It's not one of my boys. It's one of the other teams in their local club. So that keeps me very busy on the weekends. I like trail running as well. That just getting out of the hustle and bustle from time to time is good for the soul.
Absolutely.
But yeah, I've been in the finance industry now all my working career, so that's over 30 years.
What do they say? Do what you love, you never work a day in your life?
100%. Very passionate about it. But I guess for me, I did start in the corporate world, but very early on, around about when I was 30, I decided to go out by myself and start a small business. At the time, it was just myself. So SMEs are close to my heart because I've been through that journey and still involved with I'd say a medium-sized business now. But it's been an exciting ride, and through that time, I've obviously dealt with and had quite a few clients that are SMEs. So, yeah, I thought I'd come onto your show and talk a little bit about it.
Well, we're looking forward to that. And when you're just talking now, it's interesting because you started your journey when you're around, 30 years of age, and your boys are right around that age. So it's almost like you'll be instilling your words of wisdom into them directly through today's podcast too, huh?
Absolutely. It's actually interesting. When I was doing a little bit of research for this podcast, I found that because one of my sons is a builder, and he's looking at going out and starting his own business, and around about 98% of businesses in Australia are SMEs, small to medium enterprises. So in other words, big business is a minority. And for my son, he's obviously in the construction industry, and within that industry, over 60% of businesses are SMEs.
Wow.
So it makes up a large portion of Australia's GDP, and starting to have those discussions with one of my sons, which is a bit, it's showing my age, I guess, but it's exciting.
At least he's got someone in the know in his corner, and our listeners will too soon. So, well, you started out with a bit of statistics now, so I'm going to throw some out there as well. We love some stats on this podcast, Jace. So, first of all, we do know that within the first 5 minutes of a podcast, between 20 and 35% of listeners will have tuned out or turned the podcast off. So, congratulations for our listeners that are the 2 in 3 that have made it this far. You're actually in for a treat because we do have some great stuff still to come. Here's another. A study found that most small business owners don't pay themselves a salary in the early days. So when I heard that, I also heard that 23% of the same audience listen to business podcasts during their lunchtime. And what I really heard was unpaid interns are very committed to their professional development. So here we go, guys. Let's get your professional development underway. Jace, give us some context about this. You know, we talked a little bit about this being a niche area, and today we're talking about SMEs, which is small and medium-sized enterprises. Like you said, makes up the vast majority of businesses inside Australia, and we're not really going to stigmatise that with any specific characteristics. If you're in a small to medium-sized enterprise, or an SME as we're going to call them today, business owners will know exactly what that feels like. So maybe you can talk a little bit about why this is a bit of a niche area for you, and you know, for business owners, what makes that fundamentally different from advice that you might give to other clients, for example.
Yeah, sure. Well, I guess we fundamentally work with successful individuals and families, and SMEs make up a large part of that, specifically owners of SMEs. And usually we're looking at successful businesses that manage probably or have investable assets of around just north of $1 million. And usually they're commercially successful, but time poor. And it usually means their business has quite a bit of complexity within the business. And whilst they're not struggling financially, and they're doing quite well in their business, they just don't necessarily have the time to put towards thinking about their own personal finances, because all of their energy and all of their time goes into growing the business.
And I suppose that when you are starting out a business, like we say, you know, it might be that people are cutting back their earnings potential during those early years and doing those injections because they know that the future's looking bigger and brighter for them, and consequently they're investing both time and money into this. And I know that you've spoken before, Jace, I've heard you speak about that you know, risk emerges quietly for many SME owners. What do you mean when you say that specifically?
Yeah, well, what it really means, Teneale, is that most of the wealth is built up within the business. So there's a concentration and an attachment risk to the business. So what I mean by that is that, you know, financially, emotionally, and sometimes even how the owners perceive themselves are tied up in that business. So, you know, as financial advisors, I guess that concentration risk is really a thing that we have to be aware of. And as small business owners, sometimes with all that energy going into the business, sometimes we forget about the future and diversifying some of that risk.
Because it can be pretty common to hear that you know, people want to reinvest back into their business, and they've got these grand desires for what's going to happen next, and the next area they need to get into, or the next stepping stone or whatnot. And I can imagine that when a small business owner is in that space of mind, that it feels like it can be all enveloping, and so sometimes just having that sounding board, no doubt, as somebody to come and have a chat with, can take some of that burden off them. And but I guess some of the questions that we've had before has been around the area of for financial advice specifically, that it's all just about investing. And I hear that what you're talking about is, you know, diversifying outside of the business, taking money outside of the business and starting to build something else. So how do you see the role differently then for financial advisors when people think that it's mainly just about investing?
Yeah, so for us, you know, for the established business owners, advice isn't necessarily about product. It's really about sequencing, or what we call sequencing risk. You know, what to do first, what to delay, and what not to do at all sometimes. So we work very closely with our clients' accountants, because mainly the accountants are their trusted advisor at that point in time, because they're solely focused on the business. So what we do is we collaborate with the accountants to ensure that we're building a personal plan outside of what they've developed within the business and making sure that what they can pull out of the business to diversify to achieve their personal goals is really important.
And that's an interesting area as well, because business owners will undoubtedly have a really well-built business plan. They know exactly where they're going. They've got those goals and those milestones in place. And you know, it can take that overpowering shadow that kind of says, well, if I've in my personal life, is this helping with those goals, or is it drawing me away from some of them, and which are the ones that I want to be working on? And if so, you know, how do I get that really good business plan for my personal life to actually get me there too? So I really like that concept of not only just having a business plan, but having a personal plan. It seems pretty logical, but undoubtedly when people are time poor, it can be an area that that can become one of the risks pretty easily. So while we're talking a little bit about risks, what are some of those areas that SMEs, you know, business owners are commonly overexposed, even when they are being financially successful in their own businesses?
Yeah, I guess for us, a big part of our job is stopping smart people, because most of the business owners that we come across are, one, they're successful, but they're very intelligent people in their own right. So it's really our job is to stop these business owners from making fast decisions when they're tired. Often, you know, the value lies in helping clients make fewer decisions and better decisions. So having us collaborating with those accountants who have had sometimes decades of relationship management with these businesses, they know the business intimately. So it's our job to talk and collaborate and build that trust with the accountants and the business owners to ensure that what they're trying to achieve in their personal lives, we can maximise the probability of achieving all of those goals, and giving them that peace of mind that irrespective of what's happening in the markets and the economy, that we're going to help them achieve those goals.
Amazing. And I can imagine as well that it can be extremely lonely at times. I mean, some small business owners, it's just them. A lot of them don't even employ employees. I think there's actually a statistic on that somewhere that we're going to have a bit of a chat about, that you know, many small business owners don't have employees, and for those that do, they might be the ones that are making all the decisions, and it can still feel very lonely. So I love the fact that this is a very collaborative approach that you're talking about, where you know, bringing in the business owners, the accountants, all the professionals in their lives, and actually forging a path that's based on where it is that they want to go. So
yeah,
now,
it is a fun fact. Sorry, Teneale.
Yeah.
It's around about 64% of
wow.
SMEs
64. I knew it was
are non-employing. Now, that's not necessarily the case with a lot of our clients. They do have employees, but you know, for those SMEs out there that are single operators, know that you're in good company, but also know that there are people out there are willing to help in growing your success, you know, both financially and from a lifestyle point of view.
Absolutely.
Want to invest your hard-earned money but don't know where to start? Alman Partners True Wealth presents AP Direct Invest, your online self-directed investment solution. Choose from 6 low-cost exchange-traded fund portfolios, including 2 socially responsible options. To manage your own investment experience, visit alman.com.au/AP Direct Invest and start your investment journey today. AP Direct Invest, your investment solution. Any financial product advice is general advice only and may not be appropriate for you. Always read the PDS.
Now, things don't always go the way that we want them to. As we know, there's a lot that's outside of our control. And at times we can hear a lot of uncertainty when it comes to, so you talked a lot about diversifying and making a really well-laid plan, but we can hear a lot of uncertainty, particularly when there's things like market volatility, etc. Does that change the way that you actually advise SME clients?
Well, it's treading very lightly, but making sure that, you know, our instinct is never to rush. So, you know, when things get uncertain, we slow our decision making down. We bring those trusted advisors in. So we have a chat to the accountants and any other advisors that may be important to the SME owners' lives, and we bring them into the room early, and we focus on structures and understanding the consequences of any decision. So, part of the advisor's role is to really stop our clients from making any wealth eroding decisions. So, not letting that limbic part of our brain, the instinctive, emotive part of our brain, dictate the decisions we make at times.
And we're speaking of, a lot here about those centres of influence and whatnot, but why is it important to actually ensure that we're, closely working with accountants when it comes to providing advice in this space?
Yeah, I think I mentioned it earlier, but accountants usually have the longest relationship and the deepest understanding of the client's journey. So, they've really seen the good years, the tough years, and where any structural decisions have had to been made. They've helped shape that for the owners. So, we usually find that the accountants know where the skeletons are, or at least where the paperwork is. So it's really important for us to complement the relationship that the accountants and other advisors have with their clients, and we're not there to compete with it.
And I know that when people are talking about starting out in the business space, the very first thing that I would expect many people are doing, or the advice that they're getting, is to go and align yourself with a really good accountant that knows what they're doing, knows where you're trying to go, works with business owners,
sure.
and can help out in that space. Why do you think that it can be almost a bit more cautious, though, that you don't hear, first of all, go and align yourself with a really good financial advisor?
Yeah, well, there's a little bit of history there, but usually I think it comes down to poor communication. At the end of the day, we are in a relationship business, so there's a level of trust across all the stakeholders. So, but with the accountants, it's so important to build that level of trust and communication, and understand that it is a collaborative approach. At the end of the day, we're in it for the best interests of the client. So, hearing different messages or half-formed ideas is sometimes detrimental. So it's really important for us that we have true alignment with the accountants to remove any friction or anxiety that might cause any of the parties.
Absolutely. And is there a right time then? Earlier you talked about different types of business owners and at what point in time they might go seeking advice, but when is the right stage for a business owner to go, okay, do I have to have already built myself X amount of dollars in the bank and have X amount of employees and have been operating for so many years? We hear statistics about when businesses fall over in the early years. Is it more beneficial to wait until I've gotten through that period and built something strong? Is it that I should do it before I've even set out on this path so that I don't fall over? What's the right time to engage an advisor?
It's probably counterintuitive. I think the best time is probably when the business is going well. When the business owner's not exhausted, or they're not tired, or they're not in a negative headspace. So it's probably it's counterintuitive. I know it sounds like when the chips are down, it's probably good to get advice, but I'd argue when things are going really well, that's a good time to get some trusted advisors in your corner.
Not taking the focus away from the things that need the focus at that time. You're right, because it can be that there's just so much information and so much happening, so many decisions to make, that adding another layer of decision making into that could be the straw that breaks the camel's back. So I see what you're saying.
Yeah, well, it's just making those early conversations. It gives you more options rather than limiting options maybe when the chips are down.
Absolutely. Now, talking a little bit about facts and figures, I know you had some really interesting ones to share with us, Jason. Our listeners probably want to hear some fascinating information about Australian SMEs. So have at it. What do you got for me?
One of them is that Australia has one of the largest business churn rates globally. So in a single year, this was a couple of years ago, there was 437 businesses opened, but there was 370 closed. So that's a churn rate.
So 437,000.
Yep. So that's a churn rate of 30%.
Wow.
So it's almost 1 in 3 businesses either start or stop each year.
Yeah.
So that's a rolling, that's probably a rolling stat as well. I mentioned it with my son. Construction is the ultimate SME industry, so that's probably the largest in Australia, and it represents, the SMEs represent over 60%, as I mentioned. SMEs represent over a third of Australia's GDP, so that's in excess of $500 billion annually that I say we're because Teneale, you and I are part of the SME industry.
Space.
Or space. So SMEs generate, around about 500 billion each year, which is extraordinary.
Wow. It's staggering figures, really, and the need for advice in the entire world has skyrocketed over the years. The need for advice in Australia has also done the same with the lowering number of financial advisors, and then you couple that with the fact that the number of small businesses is actually increasing. It's staggering to think that there are so many that could be using really good advice and just don't have the access to it in those same ways. So, I'm sure there's a lot more people looking for channels to seek good advice.
And that probably leads into, the RBA came out with some figures last year in 2005 that lending conditions are becoming better for SMEs, and that makes sense. I guess if you've got 98% of businesses in Australia that represents a 1/3 of our GDP, there's a lot of money in it for the banks. So if you're a small to medium enterprise business owner out there, if you need any lending, maybe just touch your bank manager on the shoulder, because their terms are getting easier and easier.
And that's good to know, because it was a bit of a hurdle that many couldn't jump through even in the first instance, where lending was extremely hard to get, even for startup, but even for businesses that are going through succession and moving from one party to the next, getting lending seemed particularly hard. So it's probably quite good to know that that's a space that is becoming a little bit more fluid. It does say that there's a lot of people that will need to align with a really good, like say their bank manager, mortgage broker, financial advisor, their accountant, all those parties to be testing and going, well, what's appropriate lend levels, what can be withstood here, so that I can actually do this next stage and make sure that I'm not going to be one of those 300,000 that's going to be closing this year.
Yeah, absolutely. 370.
300. There we go. 370,000. See?
The other, there's so many interesting stats. One of the other ones is employing staff dramatically improves your survival odds. So after 1 year of being in business, 82% of employing businesses survive, but only 72% of non-employing businesses survive. So hiring someone's actually increasing your odds of having business resilience.
Well, that is good to know. The human is still there. We're not all employing AI and robots to do the jobs of humans. We do need humans, because humans are making the Australian small business economy go round. That's what I'm hearing anyway. We really hope that our listeners are getting something useful out of today, which is to go out there. If you've got a small to medium-sized enterprise and you're looking to receive some advice, go out and research some good financial advisors that will collaborate well with your accountant and your other professionals and legal professionals, all of those professionals. If you're seeking some further guidance in this space, please, for our listeners, feel free to reach out, give us your questions. Jace is going to be our subject matter expert. Look, there's another SME for you. Got that one in, didn't
well
I?
Done.
In this space. So please reach out with your questions. We'll be happy to get Jace back on in the future to be answering those questions as well for you. And I hope that your boys tuned into this one and are feeling a little bit more confident that if they partner with the right people, they're going to be very successful as well in the whatever industry it is that they decide that they're going to tackle, Jace.
I'll ensure that they download this and many of the other podcasts, Teneale. And can I just say a big thank you for having me on your podcast, and congratulations on what you're doing. It's good to get the messages out there.
It's been a pleasure. I hope our listeners have enjoyed this. So thanks for coming on, Jace. We will definitely be getting you back in the future. For our listeners, don't forget to like, subscribe, share this content. There's probably a lot of cohort out there, your friends, your family, that are in this space, given how much of our economy it makes up. So please share our content with them. And we look forward to welcoming you back next time on The Wealth Experience.
The opinions of the presenters are objectively ascertainable and are not intended to be financial product or personal advice.